Mic test, mic test. Can you hear me? Is my webcam on? Can you see me? If you have heard these statements, chances are you have used a teleconferencing system. In the past year, you have, or your business has relied on one technology that has kept you afloat. This technology replaced almost all physical face-to-face communication with a digital face-to-face communication. Do you know what I'm talking about? I'm talking about Zoom. Today, we will look at Zoom. Hey investors, welcome to the Market Talk. My name is Ali and I love investing. I love looking for companies, searching about latest trends and finding new ways to share my ideas. That's where teleconferencing comes in. Platforms like Zoom, Gmeet, Teams, GoToMeetings and many others have seen a boom in usage and subsequently a boom in revenue. Let's see if this is temporary or permanent. Before I go on though, come on, show me some support. Click the like button and hit the subscribe button to subscribe to this channel. Okay, now let's go into today's topic. So Zoom is now the new post-COVID normal. Hey, don't take it from me, take it from the standpoint of a real economist. One may turn to economic theory. A Russian economist and mathematician Nikolai Kondratiev coined the now widely accepted theory called the Kondrativ theory. He says that when new technology is introduced into the market, the economy experiences a significant growth, followed by a crisis that causes a significant decrease that will only recover when the next iteration of new technology is introduced. So, according to this model, the US, along with the majority of the world, is now in the fifth cycle, marked by the increased access to information and telecommunications. Under this theory, teleconferencing software is going to remain normal in life now. So, Zoom is set to stay. But another factor that points to this new normal is the complementary products that other companies are launching. Zoom may just be a teleconferencing software, but its popularity has motivated other companies to launch their own systems to charge consumers and ride this new wave of teleconferencing. Companies like Dubber or Duber, I'm not sure how to pronounce it, but companies like Dubber have launched and also gone public. Dubber launched its own software into the Zoom app marketplace. Dubber claims to be a call recording software that complements the Zoom platform. It's listed in the Australian Stock Exchange, has been for a few years, but only in the past 12 months has this ticker seen a rise in its share price. So with a burst of compliments, we know that usage will pick up until it becomes a mainstay. Just like how the internet was a shiny new toy, but it became a serious tool when everybody started their own .com companies to catch the wave. Now the last indication we have that teleconferencing is set to stay is the emergence of Zoom towns. Zoom towns are names given to once sleepy villages that have flooded with city-goers escaping the high rents knowing that their jobs have gone online. San Francisco, for example, saw a mass reverse migration of Silicon Valley staff. Especially since these techies knew that they could do their job with a high-end computer and internet access, many decided to leave the city to seek lower cost of living in these towns. So, Zoom is not only changing the way we interact, but also the way we live in our lives. This deep change is an indication of a strong moat. So with all this hype around teleconferencing, let's see if it has converted into actual dollars for these companies like Zoom. However, for this video, we will only be looking at Zoom. For this video, I know there are many teleconferencing systems out there, but I have chosen to look at Zoom because teleconferencing is the core business for Zoom. Unlike Gmeet from Google, Teams from Microsoft and so on, Zoom relies heavily on selling subscription to its software and it has no other side business. Zoom became the talk of the town during 2020. Zoom stock surged 800% in 2020 alone. That's a four-bagger. Its popularity was so wild that an unrelated company with the ticker symbol ZOOM or Zoom surged 900%. The SEC even had to step in to stop trading for the company with the ticker symbol Zoom. With that said, let's look at the fundamentals and see if it is a buy for 2021. Well, no shocker here, 2020 was a good year for the company. Revenue grew by 263% just in the past 12 months. But then everything grew. Net profit, cash, return on equity, return on assets, return on invested capital. Even the current and quick ratio are outstanding now. By all measures, Zoom is a value investor's dream. All except it's too expensive. This is the one catch I found when I was looking at Zoom. Just looking at the PE ratio will tell you that Zoom is overvalued. Currently at PE of 145, Zoom is clearly on the high side. So while the fundamentals are strong and the future is bright, the high price currently doesn't seem justified. Remember, as a value investor, it's not just buying a good business, but buying it at a good price too. So, in conclusion, Zoom is a company that stands to benefit greatly from the demographic and economic shifts we have been seeing for the past year. Its fundamentals are great, no doubt, but the price is just too high on all accounts. To buy into Zoom now, you would have to wait many years to finally see your return. So, my fellow investors, if you have been using Zoom, go ahead, write down in the comment section how you have been using Zoom and how it has changed your life. And remember, before you go, do remember to hit the like button and subscribe to this channel to stay tuned for the next video. See you everybody!